Okay, so we discussed for the week 9 assignment. Number 1, we are given the data about the preferred stock and the common stock, and then we need to do the journal entries for 4 dates. Okay, so for the February 20th, issued 150,000 shares of common stock at par for cash. Okay, so it is very simple. We directly debit cash and then credit common stock. Okay, so remember it is at par. So we take the 150,000 shares times the $15. Okay, so we get $2,250,000. That is for February 20th. And then for the 26th February, we issue 500 shares of common stock at par also to pay the legal fees for organizing the corporation. So like I said last week, it is not only cash, it can be other things. Okay, so this is organization expense. So we debit organization expense, we credit common stock. So 500 shares times $15. Okay, so we get $7,500. And then for March 6, we issue 18,000 shares of common stock in exchange for land, building and equipment with fair market prices of $50,000, $275,000 and $60,000 respectively. So land is $50,000, building is $275,000 and equipment is $60,000. So we debit 3 of them. Okay, after we sum it, after we sum 3 of them, we get the total of $385,000. So we issue 18,000 shares, we times $15 first for the common stock, so we get $270,000. So we just take the difference between these 3 amount minus 270,000 so that we can get the pay-in capital in excess of par common stock $115,000. So that's how we do it. Okay, so we sum 3 of them first, and then we take how many shares times the par value. Okay, so the excess is the pay-in capital in excess of par. Then for April 30th, we issue 20,000 shares of preferred stock at $60 for cash. Okay, so again for cash we debit it, and then we always take $20,000 times the the market value. Okay, so we get $1,200,000. Then for preferred stock, we always take the shares times the par value. So we get 1 million. And then the excess is the contributed capital in excess of par preferred stock. So it can also be paid-in capital in excess of par. And then for number 2, the important dates in connection with a cash dividend of 69,500 on a corporation common stock are May 3rd, June 17, August 1st. Generalize the entries required on each date. So we are asked to generalize about the dividends. Okay, so remember the first date is date of declaration, the second date is date of record, and the third date is date of payment. So we are given already the dividends is 65,900. So for the first date, which is the date of declaration, we directly debit retained earnings and then credit cash dividends payable of 69,500. That's for the date of declaration. For the date of record, remember there are no journal entries. And then for the date of payment, just debit the cash dividend payable, credit cash. That is for number 2. For number 3, we are given the data already. So we prepare the paid-in capital portion of the stockholders' equity section, okay, or the stockholders' equity section of a balance sheet. So remember, there are two parts, which is paid-in capital and retained earnings. Okay, so you always start with preferred stock. So you take the data from the question. Is preferred stock 100 par value, and then 2%, and then 20,000 shares authorized. It is from here. Okay, and then $7,500 shares issued. So how can you get that? You just use 750,000 divide by 100. So you get 7,500 shares issued and outstanding. Okay, then you add the value from the data. And then pay capital in excess of par, preferred stock 90,000, just write it. And then common stock is the same. Take the $5 par value, and then 250,000 shares authorized, take it from here, and then 80,000 shares issued and outstanding. So how to get that? You use 400,000 divided by 5. Okay, so you get 80,000 shares issued and outstanding. Then you put the number. Okay, and then for the paid-in capital in excess of par value common stock, you add the number also, and then you sum it for the preferred stock, and then sum it for the common stock. And then for the retained earning, it is very easy. You take it from the data. Then you sum all of it. You get the total stockholders' equity, $5,350,000. That is for number 3. For number 4, so we are asked to make the statement of retained earnings. Okay, it is very easy and very simple. So we start it with beginning retained earnings. We take it from the question. Okay, 3,175,500. Okay, so this is 500. And then the net income, $415,000, and then you less dividends. Okay, so there are two types of dividends here. So you write it first, cash dividends, and then stock dividends. Okay, you sum it, become 215,500 minus. Then you minus with net income, you get increase in retained earnings, 199,500. Then you sum it with the beginning retained earnings, you get the ending retained earnings. Okay, that's all about the week 9 assignment.